Want to know the latest on the Heineken deal, or looking to know who's in and who's out of the BTC bidding process? Scott Armstrong reveals all in tonight's NB12 Business Matters segment.
There are reasons to toast in the brewing industry, and we could all get a taste of the action. This is Business Matters. There is a refreshing sense of optimism among investors this week with the news that Heineken is taking over at the Burns House Group and Commonwealth Brewery. It's believed the Dutch brewing giant has paid around $100 million for the shares owned by the Associated Bahamian Distillers and Brewers, aka ABDAB. Part of the government's blessing for the takeover was that Heineken offer up 25% of the merged operation to Bahamians, as the Prime Minister continues his theme of broadening the ownership of the nation's wealth. Heineken now hopes to do that in a share sale to the nation called an Initial Public Offering, or IPO, which could see around $60 to $65 million of the Bahamian enterprise up for grabs. There have been calls that the minimum investment required to get involved in the deal should not muscle people out. For example, those with $100 in their pocket rather than $10,000 should be allowed to buy shares. While Heineken says it's legally too early to put a price tag on the minimum investment, the company's general manager in the Bahamas, Leroy Archer, pledged it would be open to as many ordinary Bahamians as possible. Archer, who is also the Burns House Group Managing Director, said that Heineken was committed to ensuring the share deal is affordable and accessible so that Bahamians from every walk of life can participate. From one promising deal to another which has perhaps dragged on far too long for the public's liking. Yes, it's the BTC privatisation. The plan to sell a 51% stake in the government-owned monopoly has hit the headlines again, with the news that talks have begun with a new player, Cable and Wireless, despite that company turning down the chance to bid last year. This has sparked anger with the two bidders who paid $10,000 to enter their proposal and who made it through to the selection process and to the final round. These two groups are firstly a partnership between investment giant JP Morgan and Vodafone, and secondly Atlantic Telenetworks, who have teamed up with Bahamian investment company CFAL. Business Matters understands that So Annoyed is one of the bidders. They are now actively considering walking away. So far there has been nothing from the government, though an update is expected in the budget announcement next week. And finally, it seems less of us want to make it to paradise, according to the financial figures from the Bridge Authority. The authority, which manages the tolls and maintains the bridge to Paradise Island, reveals how its income from those $1 tolls we all pay had dropped by more than $500,000 in 2009 to just more than $4.9 million. Its total income fell from nearly $6 million in 2008 to $5.4 million last year. However, the bridge did still bring in a net profit of $1.18 million. Yep, that's down from $1.5 million the year before, but it's worth remembering the authority still has nearly $10 million in assets, including cash in banks and government-registered stocks. Cheers for joining us, and join me, Scott Armstrong, next week for more Business Matters.